Right, so here we go, guys. Let's have a look. This is GBP USD. You can see we've got the 3 days of drop, right? 1, 2, 3. We've got a price correction. It comes down again, and then it gives us what appears to be a reversal. But look, this is now what we call a flat market. Look, so this is a lovely directional bias going short, right? But what you find happens sometimes is it then becomes a flat market. This here is just uncertainty. Even though it's going up and down, it's still called a flat market because, look, it's just bouncing between the high and the low. There is no actual directional bias. So all you would do is simply ignore this pair because it's just a mess right now. Maybe it will fix itself next week. So you look for the pair that's right. So here we've got, this is Euro USD. Now, what's strange is, remember, GBP USD and Euro USD should always be positive correlation. They should always be moving the exact same way as each other. And what you'll see here is they're not. Look, this is negative correlation. So what that means, that is a warning indicator for you that something is not right between these two currency pairs. So it means that if you plan to trade these pairs, you should verge on caution. You can still see the pattern here. I mean, the directional bias here, you could say, let's zoom in. You could say it's a long directional bias, but you wouldn't want to pounce on this yet. You want to see what it does. Today's Monday. The normal trading days for me are Tuesday, Wednesday, Thursday. Never ever trade a Friday. And a Monday, you're really seeing the outcome of what happened on the Friday. You can see, look, Friday, Monday. You can still see the daily pattern. So we've got consolidation, fake move, long sustained run. Price corrects, price consolidates for 2 days. Gives us a fake move to the 200. Long sustained run, levels off for a continuation run. So if you failed to get in at this entry with your stop loss here, your entry here, you would be looking for leveling off for a continuation run. Wait, I'll zoom in. You'd be looking for this leveling off for a continuation, or even here, sorry, leveling off for a continuation run. That's better. Continuation run. So if you failed to get in here, you'd be looking for this leveling off to get in about the continuation run. But you can still see the pattern. Consolidation for 2 days. Look at that. Fake move, long sustained run, levels off, continuation run, price corrects, consolidation, fake move, long sustained run. It doesn't matter. Even if I saw this morning, right? But I didn't get involved in it. Why? Because I wanted to see how it's playing out. Simply because GBP USD is not playing ball. Look, it's just wild right now. So that's an alarm bell for me. So when there's an alarm bell, all I will do is I'll take my foot off the gas, even though I've seen the consolidation fake move, and I know it's going to be a long sustained run, probably down to the 800. You don't get involved right now because you want to see what it does tomorrow. Today, on a Monday, the market maker is just really collecting pips, all right? Now, you don't always see a market maker presence in a market. Look at this. This is dog shit. Consolidation for 2.5 days. You'll see here, this is quite good actually to show you. This is what we call a straightaway move. Now, a straightaway move happens when the consolidation straddles an exponential moving average, i.e. an EMA line, which is this white one, this navy blue, and this green, and this red, okay? So you've got the white, you've got the 50 EMA and the 200 EMA, and you've got the consolidation straddling it. So you already know in your mind, right, you're looking out for a straightaway move, and they're very hard to find. It would be very, very seldomly that you would be able to enter a straightaway move, okay? Because you just don't know when it's coming, and it doesn't give you, I mean, here's the fake move here, but you're never going to notice that in a million years, right? Even if you are a super professional, to notice that is the fake move, the stop hunt, is going to be very difficult. So what you would be looking for is essentially, you'd be looking for the pullback. There's no real, well, here it is right there, actually. There's the leveling off for continuation run. Here's another one. Levels off for continuation run. But again, these are quite difficult to spot. So please don't worry if you miss this and you just wouldn't bother trading this. All right. So let's have a look. Look, Aussie USD. This is a mess, guys. You wouldn't even bother touching this. So right away, going through your trading patterns, right away, in your mind, you're thinking, right, Is there a directional bias? No, there is no directional bias. So you don't have to go through any of your other indicators. You're just going to chin this off and get rid of it. What you want is, we call this a flat market, right? Even though it's up, down, up, down. Let's have a look. What you want to see, see, look, now you have a directional bias going short. This is the kind of thing you want to see, right? There, you have a directional bias going long. This is also the kind of thing you want to see. What you don't want to see is this. This is what we call flat, all right? So the minute you see this, there's no directional bias, you just chin it off. Maybe he's going to mess around this week. Next week, he'll come back. Let's have a look here. Let's zoom out. Sometimes it's good to zoom out so you can get a better look at the overall picture. Same again. This is the same as the Aussie USD that we just looked at, where it gives us a straightaway move. Excuse me. And look, remember I told you, look, straightaway moves happen when the consolidation straddles the EMAs. Now look, it's just pinging back and forward between these EMAs. If you were going to enter this trade, where you would want to enter is you're looking for the levels off for a continuation run, and you would get in about the continuation run. Okay, from here, you wouldn't enter this around here, because you just never know between the 800 and the 200 if it's just going to ping pong around, how many times it's going to ping pong around, and it's just going to keep you in an emotional roller coaster. All right, so again, chin that off. Don't worry, guys. If you come on here, right, and you don't see a single trade, who cares? That's fine. Just walk away. Let everybody else trade it when it's a mess, and let them lose their money. Don't be pressured into taking trades that aren't there. Here we have the directional bias, but there is no clear market maker in here. You can see them. Wait, I'll zoom in and I'll show you. You can see the market maker at work here. Wait, I'll come back out. Oh, here we go. Right there. So we do have it, consolidation, fake move, long sustained run. It's pretty awful though, it's not very nice. It's not, you're going to be hard pressed to get that if you're new. Price corrects, consolidation, fake move, long sustained run. But again, you're going to be hard to get this, guys, if you're just new to trading. It's very difficult to spot. And look, yes, there's a directional bias. Have you located an anchor point? Let's see. There is an anchor point here. Directional bias going short. We've got 1, 2, 3 days of drop. Then he's given us a double bottom here. He could be making this an anchor point here. Sorry, that's a peak. He could be making this an anchor point here. So, just so you know, what's this? This is GBP Swiss franc, okay? So what I'd essentially now be looking for, we want to see if he brings us into consolidation. Then we want him to pull it down and give us a nice double bottom pattern here with maybe a couple of train tracks as well. And then if it's already at the oversold also, and a couple of other factors that we would work out at the time, if we see the consolidation playing out, then we see the fake move to the bottom, the stop hunt to the bottom, and then the long sustained run. But we can watch this and see how it plays out, all right? You don't have to take it, just keep your eye on it. Yeah, pretty dog shit. USD Swiss franc and US Canadian dollar is just a mess right now, guys. Please remember, this is very important. Trading is absolutely seasonal. You get seasons where it's great, and the typical months where it is really dog shit is August, December, and any month when you get GDP reports, when you get unemployment reports. Today there was no news in the market. Tomorrow is a very bad day for trading because there is just so much bad news. I'll try and show you it right now while we're here. Wait, see this? Right, let's have a look. I will show you tomorrow as quick as I can. Tomorrow's a terrible day for trading, guys. So just don't do it. Let's have a look. Where are we? I'm trying to hurry up because I've only got... look. So today was fine, there's no news. But tomorrow, you do not want to be trading. Where is it? Come on. Oh, there we go, sorry. My bad. You don't want to be trading tomorrow, guys. Look at this. Unemployment rate, that's going to smash the markets. Gross domestic product, that's going to smash the markets. Don't trade tomorrow, but by all means, have a look, watch it, and see what it does, and roll on for Wednesday. All right?